Okay, let me know when you guys can see my screen.
Yes, we can.
Okay. And I'm sharing a big monitor, so if it's like too slow, I can switch to sharing a smaller monitor. So let me know if at any time it gets behind. I got like 36 slides, and I saw you have like 30 minutes for me, so I'm gonna try and like go through these really fast. Probably better to go too fast than too slow. I can always go back and revisit anything. So I'm going to be talking about Nintendo. Hopefully this is not the first time you're hearing about this company, but I will give a background. Some quick disclaimers and disclosures. I am a fan of Nintendo, been a customer since I was a kid. I do have a position. I have children myself, and they play Nintendo. So I definitely am biased, and so you might need to discount my perspective a bit. And definitely you should do your own homework. So this is not going to be like a recommendation to buy. It's just, part of my perspective. And there's definitely not enough time to go into all the nuance on this business in 30 minutes. So, all right, so let's talk about the business, what they do. One interesting thing about their filings is their filings are all sort of different, and they all kind of give a different kind of overview and mission. But several of them mention creating smiles as being their mission, and I thought that's a pretty cool mission. Another important thing that they mention is gaming population expansion, and I think that's also important to highlight because normally we would call that growing your market, but they see it as bringing in people that aren't traditionally gamers. So bringing in older folks, women, people that historically have maybe not been as included. And the way they do that primarily is by building and shipping dedicated video game platforms. And these are often consoles that attach to your TV. So where did Nintendo come from? Well, they're actually one of the older companies that we will probably ever talk about. They're established in 1889, so they're over a century old. And they started out making a kind of playing card in Japan. That the cards themselves are called karuta, and that actually comes from the same Latin root, where we have our word card. It's a loan word from the Portuguese. They were incorporated in 1941, and so it should be possible to get some kind of information on them going back that far, which is really interesting. In their filings, it says, annual filing number 81 or something like that. So they have a very long history. Their first video game console that plugged into a TV was actually in 1977. They made a handful of consoles. One was like a Pong clone, one was like a Breakout clone, one was kind of a racing game. And as you may know, they made some arcade games too. The first console that put them on the map, though, was in 1983, the Nintendo Entertainment System. That was a very challenging time for the rest of the gaming industry, and Atari had taken some missteps. And so Nintendo really came on the scene in a difficult time, and they executed really well. And then there's been a kind of a cadence of releasing consoles every 5 or 6 or 7 years. So I'm not going to read through all those, but the latest console that we have with us now actually came out in 2017. So that's the Nintendo Switch. I don't have listed here. They also have had mobile or portable consoles, handhelds, going back to the I guess late 80s, the Game Boy, and those are also pretty successful. So just here's the obligatory stock chart going back to 85, I think. And the thing that you'll probably notice right off the bat is it's very lumpy. And we have a really big spike back in 08 and a big trough around 2012, 2013. And then we just hit a big spike recently. So I'll revisit this, but just so you have a little bit of context of where we are in the history of the stock. The price there on the right is in Japanese yen, so that's about 52,000 Japanese yen. And if you're not super familiar with the conversion between Japanese yen and US dollars, you don't really need to worry about it too much. I do recommend, as a side note, when you read filings of foreign companies, try to get yourself in the habit of not converting the currency. Try to just get yourself thinking in their currency. It's going to make it much easier on you. So as I was reading these Nintendo filings, everything's in millions of yen, and so I just had to kind of get used to thinking about millions of yen, and the so anyway, just a recommendation there. But anyway, the going rate for Japanese yen to US dollars is about 110 yen to dollar right now, and it's usually around 100. So moving on about their business, I want to talk a bit about their culture. Their culture is very important, and it might be the most important thing about their company. So if the culture is very innovative, and you may not even realize some of the innovations that they've had. So they were the first console to really use motion controllers. This back on the Wii in 2007. This is a really big deal. These days we have accelerometers in our phones, and it's not such a big deal. It was a really big deal then, and they helped make that component cheap enough to be useful in phones. I think they were the first to use Bluetooth as the wireless standard for their controllers, which makes them kind of portable. You can connect them to a computer. They have for a long time, since the Wii and probably before that, tried to incorporate motion and fitness and movement and kinetic activity in their games in lots of different ways, and they've been a pioneer in that. With the Wii U, they tried to do something, this portable set-top box concept, in which they didn't get quite right with the Wii U, but they did get it right with the Switch. So if you don't know, the Switch can act as a traditional console. It can plug into your TV, or you can unplug it from a dock and you can take it with you. And then it has this kind of innovative thing where the either side of it can detach, and one controller can become two controllers. And so they have this kind of, they always try to bake in this kind of like family or multi-person fun in their games. And so I think they do all these things, these innovative things, better than other companies. They're always kind of pushing the innovation forward on that. Now, innovation always has risk. So you cannot innovate without risk. There's a famous book called The Innovator's Dilemma. And part of that innovative dilemma is about taking risk. And it's also about not seeing opportunity from that risk. And so I draw your attention to that because innovating actually runs counter to being conservative, because you must take risks to innovate. And Nintendo is a conservative company, and it's an important part of their culture. They have a very conservative balance sheet, very conservative business culture. They're generally not going to release a bad game, and they're they're very disciplined about what they do, how they do it. So I think they do a remarkable job to strike a balance there between being conservative and innovative. So let's talk a bit about their relationships and some more about their company. So one interesting thing about Japanese companies is, I think this may have started in the automotive industry, and Victor, feel free to chime in if you have additional info, but Japanese companies would create cross-holding relationships in order to sort of like solidify important business relationships. So I don't know if it's still true today, but it was a famous case back when the Japanese automakers were taking on the US automakers, is Japanese automakers would buy stock in their competitors, in one another, because it was so important to them that the Japanese economy as a whole not fail. And the process of building a car, designing it, is so expensive, so much capital upfront, that a way to kind of hedge that is to kind of team up with your competitors. And we've seen this in the auto industry a lot. So it's not unusual in Japan for there to be cross-holding relationships. And these are relationships where one company owns stock in another company, but they don't own the stock just to reap the financial benefit. It's more like a statement of like, we're in a relationship. So Nintendo has some very important cross-holding relationships with other game makers that you probably heard of. And one of their biggest positions, and I don't remember if I have the number exactly right, but I think they own 30% of the Pokemon company. I may not be quite right on that number. but that's a really important relationship, as well as some other game companies where they have positions. Their other relationships all seem good to me in terms of, retailers and distributors. It seems like they always do a good job of maintaining their MSRP and stuff like that. And something that's important that they've been doing lately is licensing their character IP beyond games. So one of the biggest ones I've seen, if you have kids, you may have seen it, is there's like a Lego Mario series. But you've probably seen Mario in lots and lots of places other than the games. And so I think they're getting better at that. And it's important they continue to do that because they have this character IP that is a really important part of their value. I have a bullet here on growth engine and nature of reinvestment. Is something we should talk about, although I don't have a lot to say about it. I think the way I think about Nintendo is like a baseball player that gets up, and most of the time this baseball player will hit a single, strikeout, and then a home run. And every 4 or 5 at bats is going to be a home run, and then they're just going to basically consistently hit singles, and they'll strike out, a third of the time or so. And I think just that consistency and discipline and innovation is kind of their growth engine. So it's not like we can't point at a factory or something like that. It's really kind of cultural. All right, so let's move on to discuss the next major bullet in our outline is management. So how do we see that management takes care of this company? Well, I want to go back to the idea of Japanese custodianship. And again, Victor, I know you have some experience there. In my limited experience, it seems that Japanese management, top management of companies, especially older companies, they take that custodianship very, very seriously. And in some cases, some of these older companies still have members of management or the board that are part of kind of the founding family or they're heirs to the founder. I couldn't find that that's the case at Nintendo. There may be heirs still involved, but I didn't see that mentioned in the filings. But there is certainly something to be said about Japanese custodianship of businesses in general, just very conservative. They are not incentivized purely by money. And that's very important to keep in mind as we talk about management and incentiveship. But I have here the bullets. These are all the bullets that Warren Buffett mentions. You want somebody that's intelligent, hardworking, and honest. If you get 2 out of 3, he says that'll kill you. But as far as I can tell, that's true of Nintendo management. Okay, let's talk a bit about how managers allocate capital. Their balance sheet is extremely conservative. They have a book value of something about $8 billion US dollars, and very, very little debt. We'll see their ratios later, but their current ratio, I don't think I've ever seen it below like 3. So they always have more than sufficient money to cover their debts. They don't make a big habit of buybacks, but they did a significant buyback in 2014, which brought the share count down by about 7%. We'll talk about that buyback more in a moment. And they do pay a dividend every year, but that year they only paid a 100 yen dividend, which is like $1 per share. And that's really a token amount. It's kind of the minimal amount that they will pay. So I called this one out. I'll talk more about it later as we see the context. Why was that significant in 2014? Here they just announced just a few days ago, I think, that they're going to be doing another buyback, and it's been approved for 1.5% of the company. So that's good news. And they do not do those when the price is sky high generally. So now, what are some negatives about management? The ownership of directors, like I said, the incentives are not the same there. It doesn't seem to me. As far as I can tell from the filings, the directors only own about 100 or 200 shares apiece. So we're talking about $50,000 to $100,000 worth of stock. Unless there's something I'm not understanding in the filing, That's all they own. So that's very, very different than what we see in the States, where directors may own, you know, hundreds of thousands or millions of dollars worth of stock. And these are all the directors, including ones that are kind of inside directors. I mentioned this before. It's not clear if there's kind of some insiders. You know, there's obviously no founders, but if there are some heirs, I'm not sure. They always pay dividends, so you may see that as a positive or a negative. It is mostly a negative for me as a long-term investor, but you can see as a positive as if you buy at a poor price, you effectively get paid to wait. So they have a formula for dividends. It's generally between 20 and 50% of the profits at a certain payout ratio. Right now, they're paying out at about a third of the profits, unless it's like a minimum 100 yen. And I have a couple to-do items down here, things I need to go back and check past forecasts to see how accurate they've been. Also, in the past, they've not really published much about governance, but I think as part of the ESG movement, here in this most recent annual filing, they published a couple pages on that, and I haven't really digested that yet. So let's talk about their competitive position. This is sometimes what we refer to as the moat, but what's the relationship between, what is their competitive advantage or the relationship to their competitors? And the first thing I'll talk about is brand. And I think there's two great mental models for thinking about brand. One of them is a brand is like when you see a brand and you trust that brand, you're licensing that brand to do something. So if you see, a McDonald's sign, you trust McDonald's, you trust them that the food's not going to make you sick, it's going to taste a certain way. So brand as a sort of like proxy for trust. And so I think that's a very important way to think about brand. And I think Nintendo has done a really good job of safeguarding their brand. One example that comes to mind is when I was a kid, they would not allow like violent games or any kind of blood or gory games to be on their platform. Of course, when I was a teenager, I thought that was dumb. But as an adult, I can definitely see that as them safeguarding their brand. And they are very focused on kind of a holistic, healthy role of video games with children and the family. And so now it's very clear, while they do allow violent games on their platform now, they do have ratings. And it's very clear, like if you think about if you're going to buy an 8-year-old a video game system, it's very heavily tilted towards getting them a Switch versus like a PlayStation or Xbox. The other one is portability of brand. This is another model of how you think about the strength of a brand. And what that means, this is borrowed from Seth Godin. And he says, imagine that Nike made a hotel. Imagine Nike made a hotel. What would that hotel be like? The fact that you can close your eyes and imagine that hotel tells you that Nike's brand, it has a personality and it has portability. Now, conversely, imagine if Marriott made a shoe or Marriott made a tennis shoe. It doesn't immediately come to your mind like, what would that shoe be like? What would it be like? Would it just be like a plain brown shoe? What would it be like? So Nintendo, again, I think has this portability. If I say, imagine a Nintendo hotel, I can absolutely imagine what that would be like. It would be fun. It would be cute. It would have things that were interactive and, for kids to do. Imagine Nintendo shoes, imagine Nintendo shirts. So they have a very portable brand. You understand what their brand stands for. Kind of cute, fun, smiling, safe, interactive. These kind of things are all strongly associated with their brand. Intangibles are also hugely important for their value. And the top one that comes to mind is, of course, character IP. And people, this is subjective, and people will definitely disagree with me on this. But I do think they have great character IP, really alongside Disney. Now, Disney has way more character IP. So in a cumulative basis, Disney beats everybody. You know, they bought Marvel, they bought Star Wars. But if you just like take one, you know, if you just take Mario versus Mickey Mouse in any given household, and you ask the children, you know, who do you prefer, Mario or Mickey? I think it's going to be a good fight. And you might pick some other characters. So, like for my daughter, it might be like Elsa. So Elsa might beat Mario. But for my son, Mario would probably still come out on top. And so, even though the number of characters is smaller, they have some really strong characters. And bear in mind, they have that stake in Pokemon. And so, there's very strong characters there as well. Technology IP also, you know, they build consoles, they do all kinds of things. Many things don't ever even see the light of day. They're always experimenting. They don't really tell us everything they do, but one of their filings, for example, they mentioned working on sleep tracking and drowsiness tracking. They've released pedometers that connect to games, so that like how far you walk affects your game. So they're constantly you know, building technology and experimenting with how technology can work together to do fun things. And so I'll remind you that they've been building these kind of video game consoles and connected devices basically longer than anyone else that's successful. So they really have a strong history and culture of this. And so we may not think of them as kind of like the big patent, you know, patent house like IBM or Microsoft. They do have significant technology IP and know-how. Probably goes without saying, their main competitors are going to be Sony and Microsoft. Apple's also a significant competitor. It doesn't seem like a direct competitor, but they are. Apple makes a set-top box for the Apple TV. You can play games on that. They do have a game subscription service. And so Apple's a very serious competitor, and they could be a serious threat. And of course, you know, Apple and Google, their smartphones, the numbers, I don't have any unit numbers in this presentation, but you know, unit numbers for like mobile games are like an order of magnitude higher than console games. So console games, we may be talking about tens of millions of units, whereas mobile games are easily in hundreds of millions. So in terms of competing for people's leisure time and game playing time, it's very significant competition. And then, you know, Netflix, for example, is fond of pointing out that they're competing with anything that you'd be doing when you're not sitting on the couch watching TV. So kind of all your leisure space is kind of a competitive space. So barriers to entry, really significant for any company. And it may not seem to you like barriers to entry are very high to go make a game console. It's kind of a solved problem technically, especially with all the computer scientists we have on the call here. But I will remind you, a lot of people have tried, and you can go search. There are lots of like kind of indie consoles. Steam just released a console, which maybe it will be successful, but others have tried and failed, and it's not as easy. It's not just as simple as solving the technical problems. You have to have the content, and so anytime you're building a platform, there's that catch-22 of the platform has to be good to bring the developers, and you know, your people aren't going to want to develop for your platform unless they see some success and money there, so a market there. So there's a bootstrapping problem. I'll say when I use the word platform, this is really important for Nintendo. Nintendo has a platform, and a console is not a platform. A console is just part of a platform. And I'd say a console is a necessary but not sufficient element of a platform. Why do I mention this? It's really important for distribution. So we're entering the age of digital distribution. Nintendo's going to be able to, and they already are, they're distributing their own games through their own channels on their own console. That means they don't pay 30% to Apple on the App Store or 30% to a retailer. And so we've seen that already in the margins, and that's very significant. There are people that don't get this. They will say, oh, Nintendo should just give up on consoles. It's too expensive, and they should just make games. But that would just completely destroy their valuation. The platform is really an important element of their valuation. How durable is their competitive advantage? I don't have a great answer to this other than to say they have survived failures. And we will talk about one of those. And so that's an excellent point to spend more time on. How intrinsic is it? I don't have a good question to this other than to say I think it's baked into the culture. And so we've seen, a couple generations of CEOs, and same things seem to continue and maintain the culture. I do think it's strong, but we will see when there's still some kind of legends that are alive, like Shigeru Miyamoto. So when they pass on, we will see how well things continue. Network effects are okay. I would say they're okay with their games, but they're not as strong as they could be. Nintendo is not as strong at the big multiplayer games as like Sony and Microsoft are, but they do support online multiplayer games, and that is a part of it, as well as like side-by-side multiplayer. Yeah, they've done that well in the past. And as if you've ever bought a console, there is a sunk cost associated with it. If you spend, $300 on a console, and you're thinking, oh, what am I going to spend my next $50 on? You're going to think about buying a game for that console since you've already spent $300 on the console. So that is significant. All right. Also, Nintendo is the low-cost producer, at least among this family. So you'll see Nintendo Switch retails for around $300, whereas PlayStation 5 and Xbox are around $450, $500. Of course, they have different models, and they just announced kind of a premium model, which is great. But Nintendo never, at least since the Switch, they don't try to have the best bleeding edge hardware. And so they're able to enter at a lower price point. They're more focused on fun than realistic graphics. And I think it served them well. They actually make money on their consoles. I don't know if that's true for Sony and Microsoft. It used to be the case that Microsoft lost money on their consoles. I don't know off the top of my head if that's true anymore. I did not look at that. But the profit that Nintendo makes on their consoles is significant. So these are some weaknesses I see in kind of their competitive position. I don't totally understand it. There's always seems to be some kind of impedance between like the Japanese culture and the Western culture. They seem to do things sometimes, like sometimes they will make things cute, whereas in the Western culture, we don't necessarily see the point of making certain things cute, So there's just some differences, and I think sometimes being a Japanese-centric company, sometimes they don't quite they can't quite execute in the West as well as they can in Japan. They were slow to do mobile games for understandable reasons. They do not make good money on the mobile platforms, but I do think they did the right thing in bringing some games to the mobile platforms. It builds their IP and their character recognition. And then they have an eStore, which is their kind of digital distribution. And they were kind of slow to drive, and I think they're still kind of slow to drive people to shopping on their eStore. But that's definitely an area where they're improving, and it's important. All right, how am I doing on time, Victor? You're muted. You're still muted.
Thank you. Yeah, I think we're fine. You're towards valuation now, so I think we can just do valuation and some Q&A. So that'll be good.
All right, try and get through this quickly. Okay, so here's their stock chart again, except I showed it before, but I made one change and I plotted it on a log plot. And I think that is the way to look at it. These things are kind of multiplicative, and whereas before it looked like we just had like two spikes, one spike here and one spike here. Here you can really kind of see the cyclicality of it. And yeah, there's generally an upward trend, but also we see the cycles, and I'll show you more details about that. But this is basically the bear case, is that it's cyclical. We just had a peak. Now we're headed into a trough. And this peak here looks an awful lot like this peak here. So people are definitely thinking, oh my God, we're headed right into this very same trough. But it's not, and I'll explain why in a moment. Another bear case is that this is a Japanese stock, and it's kind of a cliche in value investing circles that Japanese stocks are value traps. There's many Japanese stocks that trade near book value, or at a small multiple of book. They kind of look like traditional Graham value stocks, but for reasons that I probably don't even understand, kind of macroeconomic and cultural reasons, Japanese stocks don't generally trade the way that American stocks do. They don't generally get the same kind of multiples. And so a Japanese stock may trade at a low price book for a long time, and they may never send that money back to you. So there's just a kind of a reputation of there being value traps in Japan. And so it certainly could be the case with Nintendo. I don't think it is, but it certainly could be. I've heard people say that the console has kind of a limited market. It's just maybe only attractive to very narrow demographic. Maybe it's only young boys. I don't necessarily agree with that. Nintendo themselves, they certainly are trying to expand the market, but that is a bear case I've heard. And I've also heard people just kind of say that, hey, they get compared to Disney a lot. So even when I was speaking to Raza earlier, kind of the first comparison people make is to Disney. And I think that's a great compliment to Nintendo. It shows the class that they are in. But I would remind you, like, I would not make these as like a apples to apples comparison. They're not in the same business, but they do both have great character IP that they need to build upon as part of their kind of reinvestment engine. Right. Let's look at some of the financials as part of the evaluation. So this is their income and revenue plotted over the past 40 years, going back to 81. And I didn't have all the data going all the way back. So this green curve is their market cap. And so I only had that going back to 2009. And what's this kind of bluish, is their enterprise value. So that's when you net out their cash and pay down their debts. You see it's lower than their market cap. That's because they have such a strong balance sheet. And then this gray line here is one that I derived, and it's the owner's profit. So they have a metric called owner's profit, which is kind of like the bottom line profit attributable to owners. And I multiplied that by a multiple of 12 just to kind of get things kind of similar. And so you can see like the enterprise value kisses the 12 multiple here, basically real close to where we are. And also in that last time that there was in 2011 when we went into a trough. So if you're superstitious at all, like, you could certainly see this as like a very bad omen. It's like, oh my God, that's the kiss of death there. And this bottom line is kind of and this is on a linear plot. So let me put it on a log plot. The log plot, I think, helps you again see kind of the cyclicality of it. So while these numbers were fairly low, too low to see it, you can see it here. And so they actually had some years where they went negative. And so that was their bad years. And I'm going to talk about that on the next slide. And so we can't plot the log values of those. But okay, so part of so they had, so basically 2012, 2011, 2012, 2013 was very bad. They had basically two and a half unprofitable years, and their stock crashed. But if you read their filings, they do not come out and just say, oh, we failed, it was a terrible thing. One of the first things they mention is the strength of the Japanese yen. And so I don't know if this is part of the great financial crisis, but you can see, like, as soon as 2008 hit, the US dollar got weaker and weaker compared to the Japanese yen. And so if you're making something, if you're building something in Japan and then shipping it to the US at some price point that you announced back here, this is very bad for you because you're selling in US dollars and you're paying your employees in Japanese yen. And so this basically about half their losses were attributed to this. The other half was this was basically the end of the life cycle of the Wii. So what I've done here is I've plotted, this is their stock price on the bottom on the log scale. Here's that gray curve that's like the 12x multiple of their profits. Here's the actual profits. And then here's their market cap, which is like the same as their stock price. So this green curve and this blue down here are basically the same thing. And then enterprise value is, again, you net out the cash, pay off the debt, and buy all the stock, and that's the cost of the company. So the company got very, very, very cheap here. And this was right at the end of the life of the Wii. Sorry, the end of the life of Wii is here, 2012. And they came out with a system called the Wii U. And the Wii U was not very successful. And so now looking back in hindsight, we can see the Wii U was kind of a stair step to the Switch. Basically, they were trying to do something that was kind of a hybrid between a portable and a console, but it didn't quite have the portability of the Switch. Technically, you couldn't I think you couldn't like leave your house with this portable piece. It had to be kind of a slave to this base station. And so this is a really significant period and something to understand. If you're thinking about the bear case of Nintendo, this is it. This is what you need to understand. So they had multiple things happening. They shipped a new console. That console is basically a failure. They had this really stiff headwind in terms of the Japanese yen. And they are also there. They had a mobile system. I didn't put the portable systems on here, but they have a portable system, Nintendo DS, which is really successful, but it was also kind of approaching end of life. And people were like, oh, should I have a Nintendo DS or should I have a Wii U? And so something really significant has happened is that Nintendo, they've had two systems for a long time now, a handheld and a console. With the Switch, their platforms have consolidated. So all their investment, all their development dollars, and that of third-party developers really just goes into one system now. So they're not dividing their attention between two systems. They have one system, and this system has been a massive success. So we're kind of back to this success story that we had with the Wii, but even better. And I would, will we see another strong yen like that again? I could not predict, but that's, it's not a part of my model. Here's a very simple but nice chart that we love to see. This is share count since 2008 and very stable. And then what did I talk about a minute ago? A significant 7% share buyback. At the same time, they only paid a modest, minimal dividend. If I go back to this chart, if I were to overlay financials here, like for example, price book, if I before I knew about that buyback, I was looking and saying, God, if I could go back and buy Nintendo at the perfect time, it would have been 2014. Because 2014, you could see the strength of the balance sheet. They were turning a corner, the Japanese yen, US dollar getting back into balance. And we knew a new console was on the way, although we didn't know what it was. But just looking at value investor fundamentals, 2014 would have been the time to buy. Well, that is precisely the time that they bought back 7% of the company and basically suspended the dividend. They paid minimal dividend. So this may not seem like a significant chart, but for me, this is hugely significant. They bought at exactly the time I would have wanted to buy as a value investor. And so that's exactly what you want to see directors do. It's not often done in Japanese companies. And so it just so happens they just announced the buyback here too. So take that for what it's worth. All right, this is a quick overview of some kind of just balance sheet health. Basically, they have these are in billions of yen, but you'll see the current ratio here above 3, price book. So I think market cap now is something like less than 50 billion US dollars, and the equity value is something like 8 billion. So very low price book. These ratios are not quite right. Forward earnings is actually probably like 18, but in terms of kind of their average multiples, these are very healthy. I don't think these are all super helpful. Return on equity, like they have a healthy amount of capital that they're not using. So I don't think it's a totally useful metric, but suffice it to say, very strong balance sheet. All right, so for the future, this is where I daydream about the upside optionality. So I do think this is an asymmetric bet. I do think downside is very limited. Worst case, we get kind of a trough like we saw before, but then, they continue to execute. But really, I think that we are entering a phase where console cyclicality will not be as bad. They have, for reasons I mentioned. And there's a quote that Warren Buffett used with respect to Disney. He says, Disney is so great. It's like you have this oil well, and then you pump out all the oil, and then the oil seeps back into the ground because you make a movie, and then the next generation of kids grows up. The parents take those kids to come see the movie, and you get to make money on the same thing. And I don't know how widespread this is, but I can tell you in my house, this is exactly what is happening. So my son primarily plays a Super Nintendo Classic, and he primarily plays the games that I played when I was a teenager, and he loves it. Now, part of that is because I'm not letting him get a Switch at this point, but there is some of this kind of oil seep back into the ground compounding happening. So to what extent, I can't say, but I do think it's significant. Middle-aged people are, have children now, they're telling their children about these characters and these games. Now there's automatically trust there. And so I think that generational, reaping is happening. Moving towards digital delivery is really significant. Don't have time to get into details, but basically it could mean going from a gross margin of something like 20% to a gross margin of something like 50%. And, in terms of like owner earnings, from like 15% to like 30%. So it's really significant, the digital delivery, not paying that retail tax. Being able to slap a digital SIM and a cell phone antenna into a device is becoming commodity. So I tend to imagine what would happen if they put cell phone antennas into their devices. They are building an amusement park. It was bad timing with COVID, but they have an amusement park. It's very exciting. And another really interesting thing, don't have time to talk about it, but there's a movie coming out, and just so happens, not just so happens, but significantly, the people making the movie are the ones that make the Illumination Entertainment, the Minions movies. The president, I guess it's the CEO of that company, has been added as a director of Nintendo. So it's a very serious relationship. I think they will do a good job with the movie. Okay, so let's get to numbers. What do I think the stock is worth? And then I'll be able to pass the torch. So I promise you guys, Scout's Honor, I did not back into these numbers. It just so happens that this is very close to where the stock closed today. I promise you I did not back into that. What I did is this here is 2021. So just for comparison, this was the banner blowout year, and they just released their prediction for 2022. So I start my DCF with their prediction. Because of the cyclicality, I do not think it's a great to just model Nintendo like just plug and chug a growth rate. So I tried to just model out the cyclicality. Let's say, okay, next year is going to be 1.6 trillion Japanese yen. It's going to drop down to 1.3. Then we're going to have this long trough of 1 trillion yen. That'd be really, I think this would be really bad, but let's say it happens. Then it's not unusual when a console comes up to more than double revenues And then let's say that goes on and you go into a trough. So you kind of end up with this kind of cycle that you can see is kind of like slowly growing on this log scale. So this is kind of like what we had, what their past looks like. So things kind of continue in that way. And I think one of the things about Nintendo is longevity. So I have no problem imagining Nintendo in 10 or 20 years. And so I modeled out for 20 years, and then a terminal value, a terminal growth rate of only 2%, a discount rate of a very conservative 10%, and I end up with like $60 a share. And that just coincidentally, like I said, is about where it closed, around 53K, very close to where it closed. So I call this the nominal valuation. I mean, this is just like, boring, nothing really changes, nothing has changed. They're not, this is not what I believe to be the case. I think this is kind of the bear case. So here's an optimistic valuation. As you guys should know, you can just play with these numbers and get hugely different outputs. So don't put a lot of stock on these numbers. Please do not go buy the stock just because you saw Jacob put up some numbers here. You could just change this by 0.1% and get a very different answer here. So, valuation is very imprecise. It's just about kind of imagining the future. But here's an optimistic valuation. Things become less cyclical. We don't get such a big dip, but we do kind of have things kind of float along flat for a little while. Then we get a bump. Maybe there'll be a console in like 10 years. I'm saying in 10 years, there'll be a console, okay? And then about like 8 years after that, maybe there'll be another bump. So this is not hugely optimistic, but I'm calling it optimistic valuation. I did give a higher terminal growth rate, which is 5%, and that's significant. It just, more than doubles the terminal value. And I nudge my discount rate down. Hari might disagree with me there, but the way that companies are really valued is against the risk-free rate, which is way lower than 9%. So I think it's just a little bit optimistic to say, okay, 9% discount rate. That puts us well above our current stock price. But one just parting thought is, for me, I am an owner of the stock. For me, the margin of safety is not this. For me, the margin of safety is the quality of the company. I feel that I'm buying a quality company at a reasonable price. So that's my final takeaway.